Hello, my name is Anton Bayer, and this is episode 35 of Daybreak with Anton Bayer. And we're going to go through the weekly brief that we did this week, and it's titled, It's Beginning to Look a Lot Like, well, you guessed it, it's Christmas. We officially started the fourth quarter of 2022, and we started off with a bang. Stock market rallying days 1 and 2, Monday and Tuesday of this week, which has been terrific. But the topic today is holiday sales. What does that look like in just a mere 90 days away? Bain and Company has reported that retail sales are projected to increase about 7.5% this season over 2021, which is good news considering 2020 and 2021 were both banner years of retail sales. Now, you may recall 2021 was a weird year because that was the year following the pandemic where everybody in 2020 bought everything online. So in 2021, were online sales going to continue and increase? Now, to give you an idea, in 2020, online sales increased 64%. So in 2021, guess what? They increased another 11%. So that was very good for retail sales, but also in-store sales also increased. And so that was very good. In-store sales increased 8.1%. Online sales increased another 11% last year. So that's all good going into this year. But everything changed for this year. We have inflation, Ukraine war, we have supply chain issues. So a lot of factors are into place. And the big story, as I mentioned, is the online sales continuing to grow along with in-store sales. So that's very, very good. One of the points that were brought up in several reports that I read is that the retail sales are looking good for 2022, which is good. And typically in the late summer and early fall, when holiday sales are starting to be predicted, that's when we start seeing what the retailers are doing with their inventory and how much buying they're going to do. And with COVID in 2020 and 2021, it was very unaware and a lot of confusion from retailers what to expect. Would people spend? Would they not spend? As it turned out, they did continue to spend, which was very good. Now, Mr. Let's see what his name, Tony D'Onofrio, who is the CEO of the top 100 retailer influencer, he had a report last week on September 27th with his observations about the holiday season. And what he pointed out is that it's looking like another decent year. In fact, concerns for COVID have decreased significantly this year by 52%, which has been replaced by financial concerns, which has increased by 153%. All that to say is that consumers have a lot on their mind going into the holiday sales. But total sales this year are predicted to be about $915 billion this year, and 72% of that taking place in physical stores, which is terrific that the in-store experience is going to continue this year in Christmas. And I don't know about you, but that's a lot of fun. In fact, one of the traditions we have in our family is we take the kids and the grandkids, we all give them some money so that they could buy gifts for each other. And it's fun to go around the mall with them and see what they think would be good things to buy for their cousins and their siblings. And so it's a lot of fun. And the funnest part is hiding, because you can't let the other people see what stores you're in because they can guess what you're buying it for who. So it's a lot of fun to go out into the malls and to be going and let the kids do some buying on their own. But anyways, CNBC, not surprising, came out with a much more dire approach to their projections. In fact, they're saying that holiday sales may be flat and adjusted for inflation. Inflation is a big factor this year. Prices have gone up for everything. So they're looking at price consumer increase of 8.3%, holiday sales up 7 to 8% for a net zero gain in actual sales. So you're buying the same amount of stuff at a higher price. More than half of the consumers they reported are looking at 80% of them expect to be affected by inflation and on their buying, and only 52% said that they may be able to afford the holiday expenses for going in from 2021. So needless to say, CNBC has less of a positive view on the holidays. They quoted in an article, already retailers have relied heavily on discounts to move excess inventory and clear shelves in time for the holiday shopping season, which typically kicks off around Black Friday after Thanksgiving. It's a critical time now for retailers, and they can count on upwards to 40% of their annual sales are made during this time. Retailers are expected to continue leaning on promotions, a lever they've grown familiar with in struggling to adjust to changing shopping habits in the recent months, unquote. So what does this mean to me? The pandemic, 2020 and 2021, and following government-imposed restrictions really had an impact of how people were going to buy their gifts for the holidays. Primarily in 2020 was online sales that continued into 2021. It was encouraging after a 64% increase in online sales in 2020 that it grew another 11% in 2021. And as mentioned earlier, it's also encouraging that in-store sales also increased and didn't plummet. So that's good news for the malls and the retail market. However, the big issue with the stock market is not holiday sales, but the Federal Reserve. And what are they going to do with their rate policy increases? Very strongly, the market is looking at in their December 2nd meeting to raise rates another 1%. And with that, the question is what are they going to do in 2023? I think the stock market is pretty much priced in the rate increase in December. The question is 2023. So we'll see how that is. Right now, the conversations, I'm sure, are looking at how the Ukraine war is going to play out, how supply chains are going to affect holiday sales, and then, of course, the Federal Reserve. Today, the Bureau of Labor Statistics released their report on job openings and labor turnover, and they reported that new openings are down 1.17 million jobs, but still remain at 10.05 million job openings right now. That's the highest in recorded history. So employers are still growing and they still want to hire more people to meet the demand and the growth of their companies. That's all very good. So as I mentioned, the stock market is up for the fourth quarter with the bang. Yesterday, the major indices, the S&P was up 2.59%, the Dow Jones 2.66%, and NASDAQ followed and trailed with a 2.27% gain. Today, the market had similar gains and putting together the first two decent days in the market since June. So we'll see how that plays out. The sustain of this rally is going to be dependent upon the Federal Reserve. I think all eyes are going to be on the Federal Reserve. And between now and December, we might see markets gain and loss, but I think it's going to be fairly much a flat market until there's some more visibility going into 2023. So that's today's report, the weekly brief, and be sure to read that at our website at www.upcapitalmgmt.com, or give us a call. We'd love to talk to you and hear what you have to say about this weekly brief. So that's it for today. Titled weekly brief today is "It's Looking a Lot Like Christmas." Talk to you soon. Bye.